The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 1st, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got your back. You can always let those fingers do the walking. Send me an email, steve@tfnn.com. Please, inside that subject heading, put radio show question, and inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Welcome to August. How about that? Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow off 60 points, 25,355 is the print. S&P is off about 4, 2812. NASDAQ 100 up 30 points. Russell off 11. That's the big, the transports are down nearly 0.8% or 83 bucks out there. You've got gold off 6, silver down 11 pennies, light sweet crude up nearly $1.91, leading the charge. Leading the charge to the upside. It is Credit Acceptance Corp, CACC, Khaki Cousins up $36.40, nearly 10%. You've got Coherent, COHR, that's up 21 bucks. Maybe it's Incoherent. It's up 21 bucks or 13%. SodaStream. Been a long time since I've looked at a chart for SodaStream, but huge volume behind its move. Already 3.1 million shares, gapping up, trading up 19.59 as we speak right now. That was a good year. Paycom Software up 19 bucks. Molina Health up 17. To the downside, BlackRock up 22 bucks. That's 4%. Baidu is off 17. Ferrari races the ticker symbol. That's racing to the downside off $11 and change, nearly 9%. So we have things to look at. Of course, I want to look at what you want to look at, and that goes to our first, let their finger do the walking listener, and that is Greg M. Greg writes in, morning, Steve. Well, Greg must be on the West Coast. And good morning to you. I've been watching Triple M, MMM, and it looks like an ABC up to about the 224 level. Yes, it was very good. Yesterday was very good, and today it is pulling back. Is it time to buy a little for the long term? Well, let's go take a look at it, Greg. Let's go take a look at Triple M, 3M out there, and we'll start by taking. So the first question, is this an A to B equals C to the upside? Here's what I see on the daily time frame chart for 3M. It made the exact type of bottom that you like to see. That took place out here on July 24th. You can see it was attempting to do so on June 25th. It attempted that same type of bottom on July 2nd. The third time is the charm. Or at least that's what it looks like out here. And so it makes that Rhodes momentum indicator signal bottom. What does price do? Also closes above Stevie's red line. It was red at that stage. It's turned green with envy back on July 26 out there. And your question is now the time to buy? Here's what I'd like you to do. Oftentimes, Greg, when you get the price oscillator that gets to the zero level, in this case, that's exactly what the line color change from red to green means. That way I don't have to put the price oscillator in the bottom of my page and, add more stuff for you and I to look at. We just have to look at one line. We know exactly what it means. Is the price oscillator rising or falling? Is it above zero, below zero? Where's price in relationship to Stevie's line out here? When you get to the zero level, typically what's going to occur is price and Stevie's line will catch up to each other. That is priced out at about the 204.59 level. That is essence is the top of its daily box out there. Has this formed a bottom? The answer is yes. Do you want to try to buy this at like the perfect spot out here? If you do, then that would be about the 204.59-ish area. You're trading at 208.49. But does this look like an A to B equals CD to the upside? To me, that would be a stretch on a daily time frame chart, because I suppose what you would be looking at is the following. You'd be looking at the low out here from July 24th, a run up to the high in July 27th, and then a one-day pullback out there of about 29%, giving you just basically a straight shot, catapult to the upside in the 224 level. So that is the A to B equals CD that you drew in. Is it wrong? No. Is it the one that I would go with? Nah. It's too violent. I don't like violent A to B equals CDs or violent anything out there. But here's what we can't say, Greg. It's formed a bottom. You're looking at it from a long-term standpoint. Price is likely to go ahead and, it's got to deal with this gap out here. So that would suggest that, hey, maybe this pulls back, gives you that entry around the 204 level. Let's go look at our 3 time frame charts out here. Let's go see what they say for 3M, triple M out there as soon as I can find it. And, they show, here it's going to be more easy. More easy? Are you kidding me? And you graduated from college? I did. Just not in English, not in the grammar. That was not, you're either right side brain or left side brain. I can't draw a stick man, but you put together a bunch of sticks together, and I can tell you what that totals. In this case here, the total of those sticks is 214.75. I'm not talking the band. I'm talking where price is going to run into resistance, Greg, because there was a big move to the downside, big downdraft, 11.6 million shares on April the 24th. So, yeah, try to buy it in the 204.59 level. At least that's what the daily time frame chart shows us. The weekly says, hey, you're trading above the top of the box. That's 204.13. That's good. And at 197.49, that had support at the bottom of its monthly box. By the way, this is a brand new month. It's August, and that is a brand new August profile. So 197.49, that would be the level where price could pull back to, and you would not want to see it close below that. So, Greg, thanks for writing. Thanks for listening. Nice spotting, by the way, on that potential A to B equals CD. It's just not the one that Stevie's son would go ahead and use out there. All right, so the Dow's off 54. S&P's down 3. You too can get in on the action. Action Jackson. All you got to do is send me an email, steve@tfnn.com, for whatever ticker symbol, whatever time frame, whatever it is that you want me to assist you with. Put my eyes on it and put radio show question, and then we'll go ahead and get to it. Just like Tamar did. Tamar said, do you think Apple's going to go higher today? So when we come back from this break, I'll finish reading Tamar's email and see why he's asking that question. Oh, he's looking to short a fade intraday. Tamar is living on the edge. Let's go see if there's volume behind this move in Apple. I think there is. 46 million shares shorting the big guy, eh? We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So tomorrow we'll come back to Intel. But first, because of call-ahead seating, we've got Mike and Norman Beach on the line. So let's go out to Mike and Norman Beach. Thanks for calling. Thanks for holding. How are you doing today?
Steve, I'm doing great. I shorted Intel and covered, and I was looking at where it is right now, around 48.60. That's about the price where it gave it up yesterday on the bounce. Do you think where it is now would be a good place to sell short again?
I don't.
Okay.
This one is kind of so let's do this. Let's do a couple of things before I just say I don't. Let me actually just go through the charts and let's see what they're communicating to you and I, because I don't want to get this one wrong. Now, what we do have out here, what it appears that we have in the case of Intel, is a large A to B equals CD to the downside. And the reason that we say that is because the swing point, or the B point, which was June 28th, had 29 million shares. And when this thing gapped to the downside on July 27th, it was 67 million shares. Closes under the swing point. That says, okay, we could have Intel heading down to 44.20 as the one-to-one level. We know at 43.10, I believe 43.10, there was a breakout area. Yeah, there was a breakout gap. So potentially the price target is down around that level. But if this thing is going to be an A to B equals CD, it should stay below that 48.50. Should. And if it gets above 48.50, maybe the better price if you're going to try to take a short on it would be the bottom of its daily box out there, and that's at 49.10. Now, maybe the difference in price between 48.60 and 49.10 isn't worth it for you to try to wait to see if that happens. If that's the case, cool. Then go ahead and fire away. But what I would then suggest is that, Mike, is if it closes over 49.10 at the end of today's trading session, I would exit that trade. I go ahead and take my small loss out there. Right. So that's the first. When I take a look at this chart, that's what I would be looking at. Even though it has that confirmed A to B equals CD to downside, not all A, B equals CD patterns complete. The ones especially that don't are the ones that create that Rhodes momentum indicator bottom signal. When price had gapped to the downside, actually it was before, well, when it did gap to the downside, it was doing less relative energy, even though it was a wide-ranging bar and there was big volume behind it. And on the trading session of July 30th, it stretched lower, but still was doing it with less relative energy. Those patterns are always suspect with regard to price wants to move lower, because that is how markets form bottoms. You know, there's this theory out there, sell high, buy low. I say that is all BS. It's all before Steve, because buy low, that means you need to buy a bottom. Buying low as things keep moving lower, that's the wrong thing to be focused on. You want to learn how to buy a bottom. Well, today, right now as we speak, Mike, it's a bullish engulfing candle. Small body from yesterday, but that's the actual signal, one of the signals to the Rhodes momentum indicator pattern out here. The other two are going to be, this case, the bottom of its daily profile and Stevie's red line at 49.78. So what Intel's actually trying to do is form a bottom. You've got two competing patterns out here. Mike, I ask you, because I don't know the answer, which one is right? Is it forming a bottom, or is it going to make that A to B equal CD to the downside?
Well, it looks like we have two things in favor of a bottom. We got the Rhodes momentum indicator, and we have the bullish candle right now.
Well, the bullish candle is just the importance of the bullish candle, so I have found. My experience is they don't mean diddly until they occur at the completion of a pattern. Maybe it's an A to B equals CD. Maybe it's a seventh wave move. Maybe it's the Rhodes momentum indicator. That's where they really, as Tom likes to say, talk, walk, and squawk. That's where they talk, walk, and squawk to me. You need to see follow through. Price hasn't proven itself. This pattern hasn't proven itself because there's clear resistance up top. And that's why I say, okay, I can see going ahead and shorting at that 49.10 level. Whether it's now or 49.10, that's just financial decision you would have to make. But whereas yesterday, we didn't end up with a bullish candle. I guess at the time you shorted it, it probably was a Three River Evening Star. So you were right there. But the push lower wasn't like you retired off of yesterday's trade out here. No. I wish it didn't. Look, I'm glad that it has these competing patterns, because the point is maybe there's something better to trade than trying to short Intel today, at least with the message that is out here. And even if I'm wrong and price moves lower, that's okay with me, because we made the decision with the best information that was available to us at 1:23 in the afternoon. That's how I see Intel.
Well, I appreciate it, Steve, and I think what I'm going to do is take what you just brought up, wait and see if it hits 49.10 and make an evaluation there.
Sounds great. And hey, nice trade yesterday. Thanks for calling, much appreciated. And let me know how this trade works out. Let me know how this works out if I don't pay attention to Intel.
Awesome. Do you have time to do the same thing with Twitter? Look at Twitter?
Yeah, sure, we can do that. What is it, TWTR? Is that the ticker symbol?
Yes, TWTR.
Yeah. Okay. Now, in the case of Twitter, this one does look shortable. Is that what you're thinking of doing, is shorting this too?
Yeah, I was looking at Intel and Twitter. Actually, I shorted Intel twice, and I was looking to do that again. But Twitter also looked like it could be a good candidate. So
yeah, so in the case of Twitter, let me tell you where Twitter is going to find support, as if I know. But the stock chart knows. And what the stock chart shows is that what Twitter did back on the trading session of February 8th, it gapped higher with big volume. Big volume for Twitter was 162 million shares, 26.91. The reason that we know that is strong support is price pulled right back into that breakout area, did it on April 4th, did it with 22 million shares, 22 going against 162. Man, I'll bet you Polar, who's got the polar law vector indicator out there, was just falling out of his chair and probably went long Twitter out there, because he's like, what a perfect setup this one was, as it was out there, and then it moved higher. So 26.91 is probably about all you're going to get to the downside in the case of Twitter. It's trading at 31.70 right now. Do I see anything else that suggests that we're really at a bottom here in the case of Twitter? Not like what you and I looked at when we looked at Intel out here. So this could be a better candidate just because we don't have any real bullish signal other than we know where price is likely going to find support. So you can do your reward risk analysis, based on that.
Okay. And Steve, what I see it's been trading up a little bit today. At what point do you think you would sell it short?
Twitter?
Yes.
Well, the ideal spot a couple of days ago, so as Twitter had gapped to the downside on July 28th, my oscillator unchanged line changed from green to red. It says we're going to see over the coming trading sessions, plural, and I don't know how many that is, that price and my red line will catch up to each other. Right now, the red line number is 38.98. It's somewhere in between where we're trading now. In that would be your more ideal short trade, especially if it rejected Stevie's red line. All right.
Okay. Steve, thank you so much. All the additional indicators you brought to the table at TFNN, it's great.
Thanks, Mike. Sorry for the heartbreak. But thanks for everything you do. Take care.
Thanks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So back to tomorrow's question. He said, do you think Apple's going to go higher today? And the reason he was asking is, do you think it's going to go higher today, or will it fade down? I'm looking to short a fade intraday and get out at a certain level before the close, but I'm not exactly sure which level of support to look for. I was thinking to get out at 199. So I'm going to answer that question because you want to fade the trade. I'm going to use that. To me, that just reminds me, because you're asking the question, and my answer is going to be not fade away. So what rock and roller out there tomorrow, or anybody else in the audience, who wrote that song, Not Fade Away? One of the great tunes out there. One of the great tunes. I'm going to tell you how it's going to be, right? You're going to give your love to me. I think that's how it goes, something like that. And then, of course, the love, Buddy Holly's love, did not fade away. Well, it did, obviously, when he was in that plane crash out there. I don't want you to fade this. I don't want you to sell a strong stock like this. I want you to sell a weak stock, maybe like Twitter or something like that, but not Apple. If you just look at a 10-minute time frame chart, first of all, if there were going to be big sellers out there was a trading desk that said, okay, team, if you were on the team, we're going to go ahead and start liquidating some of our position. We're going to take advantage of this move from 191 to 200. We would put this on a short-term time frame, such as 10 minutes. We could put it on 5 minutes. And what you would see a linear move to the downside. A linear move, meaning, okay, the sellers are going to be in control. They're going to just start feeding it out there. They're not going to let it get out of hand. And you would see kind of, when I say linear, you say linear. No, I'm talking about just kind of like a straight, nice, linear type line. There's no linear line here inside of Apple. There is no trading desk that is selling. And if there's no trading desk that is selling, how do I know that's the signature of a trading desk? Man, when you see it, it is a cool thing. It is a work of art. It is like, how do those guys, gals, coordinate that? They just do. They are good at what they do. There is no such a thing going on. Here's taking a look at the 5-minute chart. You've got profiles on a 5-minute chart that are forming above the prior profiles out here. That's strong. I'm not saying that it can't sell off, but at 1:32 in the afternoon tomorrow, we don't have any kind of heat signature that suggests that that is the case. In fact, if you're going to ask me, where is it that Apple is headed to? Well, then what we would do is we would go take a look at the A to B equals CD that has been confirmed in Apple today. Confirmed why? Well, because the B point of this, which is 194.08 from the trading day of June the 6th, had 20 million shares, 21 million shares. You are at 47 as we speak right now. That means Apple. This is not a question of will it. The question is, when will it become a $1 trillion company? The 1-to-1 A to B equals CD for Apple is 214.18. 223.28 is not out of the question. That's the 1 to 1.272. Will Apple go higher? Yes. Will it be today? I don't know. Do I want you to fade it? No. I want you to think of Buddy Holly, and he's the one that said not fade away. And that's Stevie's thoughts when we take a look at what's going on with Apple. But thanks for writing and asking. Best of luck on that trade. If we take a look at what John in Sarasota wants to look at, if time permits these two, where are they going? ASNA is the ticker symbol. So let's go take a look at it. I don't know what ASNA is, and we're not going to know because the name's not going to pop up on this chart. Where's it headed to? It's stuck in a bit of a trading range, John. 389 is likely going to be resistance. It's trading right now at the center of its bearish structured profile. That means in this case here on this chart, the blue line is closer to the red line, and it's going to be like you connect this dot to that dot. Well, but the blue line is a center line. The red line is at 389. The blue line's at about 3769, something like that. And then you've got support at 328. So if price yesterday was able to close above Stevie's green line back to a rising price oscillator above zero, today you've got the same thing. So with regard to where is this going right now, 389. Anything over 389, you're back into the 445, 450 level. That is ticker symbol ASNA. PAA is the second one that John in Sarasota wanted to look at, and also where is this going. This is trying to overtake its slightly bearish structured daily profile. Tested that earlier today, tested it yesterday, got thrown back out here. You've got the rising price oscillator above zero. So this suggests to me it's going to be able to break through the top of this profile. Will it? I don't know. But it should be able to do that. It's got all the energy, technically speaking, that it needs. Now, where is it? It still has resistance, you know. That's the problem. You got a shooting star out here, John, on June 13th, the bearish engulfing the very next day. So sellers are out here. You've got your Tom DeMark set up trend line. That's on the high of June 16th. By the way, that level is 25.21. So basically, as your pilot, this wants to go higher. In other words, we know there's turbulence, and therefore I'm telling you, tighten your seatbelt. And even though this thing is going to go to, I can't go to 40,000 feet, you know, we're going to go from 33 to 35 or 36. You still got to keep that seatbelt on. It looks like a lot of turbulence ahead as it continues to move higher, which it should do. But it's got to close above 24.82 to confirm Stevie's message. And then even above that, man, you've got resistance all over the place. So best of luck with that trade or investment. We've got ACDC, Steve, the VIX. What is your opinion? Now, that's a great question. And that comes from Art. That is a great question. And to answer that question, what we're going to do, let's go do this, Art. I think if you want to see, if you were going to ask me, which Art just did, if you were going to ask me, hey, what's the one thing that you should be watching over the course of the next couple of days, I would have said, well, it's going to be the VIX. But it's going to be the VIX this time. We're going to serve a little different cake out there. If we just serve the same cake, you're not going to want to come back and eat at this restaurant. And we want you to come back, y'all. So what we're going to do is we're going to take a look, and we're going to combine the spot volatility index. That's going to be the bottom of our screen out here. And we're going to go ahead and combine that with the New York Stock Exchange advanced decline oscillator reading. Why? Well, first, we're going to be paying attention to that 50-day exponential moving average. That number, by the way, is 1375. We're trading at 1316. Why is that important? And why is the New York Stock Exchange important? The reason that the New York Stock Exchange advanced decline oscillator is important is because it has been below zero for quite a period of time. What's quite a period of time? Well, it ducked below that, closed below that on July the 13th. And in the face of doing that and being below zero, meaning the advanced decline data is waning and it's below zero, says sellers are in control. Well, you could have fooled me because what we've seen is the New York Stock Exchange moved to higher price. So how can you say sellers are in control? I always say be careful. Be careful what you ask for out there. Now, at this stage of the game, price has been moving higher, which is okay because the volatility index has been below the 50-day exponential moving average. But if you're wondering what were the conditions back on the trading session of January 26th inside of the New York Stock Exchange, it too was moving higher, and it was doing so with advanced decline oscillator readings making lower highs and being below zero. The difference? The spot volatility index. Once it got above that 50-day, which it did back then, it was off to the races to the downside. That condition's not present just yet. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Let's go out to Iowa and speak with Ken. Ken, thanks for calling. Thanks for holding. How are you doing today?
Hi, Steve. Good to talk to you.
Good to hear your voice as well.
I'm looking at Ford. I don't think I've ever owned it, but I'm thinking about buying a call option for January.
So what I would do in the case of Ford, so first I'd be looking for some type of bottoming signal. And today, one of those signals that you and I would have liked to have seen would have been the low from July 26 not get taken out. The reason is because that would have been one of those Chapman wave letter G or seventh wave moves. Because we went to a lower low today, I can't look at that and say, okay, now would be the time to buy Ford. Price is moving lower, seems to be doing with enough energy out here. So it doesn't look on a daily time frame chart, Ken, that today would be the day to pull that trigger. When I then look at a monthly time frame chart, I have this kind of yellow rectangular box that represents what should be the consolidation pattern that has been trading into since 2009, believe it or not. You got to ask yourself the question, what the Sam heck is Bill Ford doing? And that's not because I'm friends with Mark Fields, who lives across the street out there, who was a great CEO, or at least I believe he was. But what the heck is Bill Ford doing? His stock isn't doing anything out here. Yeah. So even if you do buy a call option in Ford, I don't know how much upside momentum and move you're going to get. But if you're going to do it, what I would say, Ken, is wait for price to move lower, maybe into the 882-ish type area out here, towards the bottom of the consolidation. Everything I look at, monthly, daily, weekly, with regard to the Ford Motor Corporation stock out here, says it wants lower price. I don't know what's going on with the company, but it hasn't done anything in a long period of time. Maybe it's pension issues that they've got. I don't know. What do you think?
Well, that sounds very good to me. That's why I called you, to get your good advice on it.
Now, have you ever owned a Ford car or truck?
My first car was a Ford Model A.
Oh, no kidding.
Yeah.
Oh, that's great. Now, don't you wish you had that?
Oh, I wish I had it now, yeah. Bought it from my brother for $100.
No kidding. Now, so how long, so tell us about your experience in driving the Model A. Was it a babe
Well,
magnet?
I was just, it was in the 1950s. I graduated high school in 1950,
Yeah.
and I went to a railroad school, took telegraph and teletype, and went to work for the Santa Fe. 9 months after, about 1951, bought
Yeah.
his car. It had a muffler leak, and it come up through the floorboards, of course, and I drove back and forth from Ark City, Kansas, to my home, about 100 miles, and just about died from the exhaust. But I made it. It was a good car, and
And how long did you have it for?
I'm sorry?
How long did you have it for?
Oh, probably a year, maybe less. I traded it in for a Oldsmobile. I think it was about a 47, I think, somewhere around there. I really like that car.
Well, I tell you what, since you own the Model A, and you're good to Ford, we want Ford to be good to you. And I say now is not the time to go ahead and get that call option.
I thank you so much for the information, Steve.
You bet. And thanks for sharing the story. That's great information. Thanks for listening at TFNN.
Have a good week. Bye.
All right, you too. We've got some other questions as well that have come in, I believe. So let me see what those are. So this one comes from James T, and he's just simply asking about Stevie's oscillator and change line, Stevie's green and red line. And the question is the OUL line, when it's green, or he puts the OUL line is green when the price oscillator is above 0 and is increasing. You got the first half is correct. So here, I've put the price oscillator on the bottom of my screen. Difference between two exponential moving averages, 19 and 39. You will see my line. Let me get my crosshair out here. You'll see it turn from green or from red to green. You can see at the bottom, price oscillator is at 0. So a green line tells us one thing. Tells us that the price oscillator is above 0. When price is above the oscillator and change line, then what we know is we have a rising price oscillator, in this case here, because it would be green, above 0. Actually, if we look at the NDX 100 right now as an example, we have a price oscillator above 0, but price is below Stevie's green line. That says that you would anticipate, first, resistance is that line, 73.65 right now. And this says there could be or should be, in light, unless we can see some type of bottoming signal, and I've turned everything else off on this chart out here, so I don't have profiles to use or anything like that, so I'm not going to make the call on the NDX 100. I'm just going to answer your question. But in this case here, in its plain vanilla form, this would say that you would anticipate more retracement. But boy, you better know where support is at, and that says you better know where your market profiles are. In this case here, I'd be looking to the futures contract in order to be able to identify that. So I hope that that assists you with Stevie's green and red line. So that answers all of the questions that I see, other than, Peak D in the den wants us to go take a look at ticker symbol. Let's go do it, MDR. And MDR, let's look at this on the 3 time frames as well. The question is, when you have a chance, would you buy MDR? So you've got a nice breakout today, that's for sure. Was there any signals out here, Peak D, that this thing was forming a bottom? And I don't know the answer. Let's go see, where was it in that wave count? Nope, only made wave number 6. Would I buy it? I will tell you that and share with you that a close above, well, I'll tell you where the target is at, okay? The target is going to be the trading session of June 28th. That is that green dash line. That's that Tom DeMark trend line. That's where the trend, that's where the setup count to the downside, 9 count began. And that high is 2102. You're at 1978. And I don't know if price will close above that, but that's going to be your natural resistance area. So would I buy it today at 1978, knowing that you're going to maybe get 21? It probably doesn't have the right reward risk as I take a look at it. Nothing here that shows up as a significant bottoming signal. It does show that you had a nice bullish structured profile out here that began back on July 18th. That's the only message that we would have seen. What you can also notice out here and that's the beauty, Peak, of looking at the 3 time frame charts, is that we have the weekly. And if we take a look where price actually got to today, it was the top of the weekly. 2061 is the top. The high today, 2058. Now, the monthly, you can see that consolidation. By the way, folks, this is McDermott International. So this thing has really been consolidating since back in November of 2016. But if you're looking to get in it, because today is a sign of strength, then wait for it to pull back. If you're asking me where would it pull back to, the first place that you would want to target, I would say, would be 1872, the top of the daily box. The second target would be 1807. That would be the center line. Preferably, though, peak, it just would come back to 1872, not get back inside of that box out there, and that would be your buy point. So I'd say don't chase it today. It may continue to run higher. If it breaks above these other resistance levels, well, then maybe you chase it as a momentum move. Dow's off 90, S&P down 5. We'll be right back to wrap it up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we're going to finish off the session. Hey, look at this Model A. Now, I know this is not necessarily Ken's Model A out there, and if it were, he probably wouldn't have sold it after a year. But what a cool looking ride. What a cool story, right? You know, each of us have so much to share with each other out here. So appreciate Ken sharing that with us. Ruby here is a cotton trader. And she wants to know what's going on with this cotton pick and trade out there, right? So Ruby is in cotton, please. I'm in, but before the close, keep dropping and it goes back in the night session out here. So Ruby, here is the December contract for cotton. With regard to market profiles and everything out there, everything looks pretty good. But I'm not sure when the contract rolled over. And so what I do have is I've got my synthetic contract for cotton out here. And this does a better job of more reliable market profiles. I wish I could find a way to convert this over to my Ninja Trader software. I can't, other than manually. So here's the deal. So when I put this up on the screen, if you take a look at the weekly time frame chart, you're going to see that this week it's up against resistance, that 90-80 area. So you're long this, you're up against resistance. It won't tell me whether or not it's going to break above this level, but just so you know, this is where you're at. You're up. Sellers are in that 90-80 level. You want to see price close above that. That's based on my synthetic contract for cotton. Is there synthetic? Yeah, of course there's synthetic cotton. I don't mean it in the same way. So I see that price is up at resistance. I hope that helps you out. So, folks, stay tuned. Your favorite polar bear, David White, he's up next. Thanks so much for joining me. Always great to be with you. I'll be back with you again tomorrow on a terrific Thursday. And watch that spot volatility index. If it closes above the 50-day line, that's 1376. Things could get romping and rolling to the downside. Whereas if it doesn't close above it, well, it's just one of those ho-hum markets. Take care, folks. We'll see you on Terrific Thursday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.